Most traders fear losing money, but the truth is the real danger isn't in the chart, it's in the mind. Every decision, every trade isn't just a reflection of analysis, but a reflection of emotion, fear, greed, impatience, control. We tell ourselves we're managing risk, but most of the time risk is managing us. This video isn't about strategy or setups. It's about the invisible side of trading, the part that happens inside your head before you ever click buy or sell. Because consistent traders don't think differently. They feel differently. They've trained their emotions to serve their process, not sabotage it. So as you listen, I want you to look beyond profit and loss. Look at the mind behind the trade, the story behind the impulse, the habits that make consistency possible. This is not a tutorial. It's a reflection, a conversation between you, the market, and the person you become in front of, uncertainty. Welcome to Mind Over Markets. And this is the risk habits of consistent traders. I used to think risk was just numbers, percentages, position size, stop loss, things you could calculate, control, and contain. But over time, I realized that risk isn't a line on a chart. It's an emotion. It's the quiet tremor in your hands when the market moves against you. It's the tightening in your chest when your plan says exit, but your ego says wait. We all say we manage risk, but what we're really trying to manage is ourselves. Every trader wants to believe they're logical, disciplined, in control, but the truth is, most of us trade not because the setup is there, but because we can't stand not doing something. I remember one particular day, the setup looked perfect. Clean trend, strong confirmation, tight risk. I sized up, telling myself it was justified. And when the market turned, I told myself it'll come back. But it didn't. And as the red numbers grew, I didn't feel fear at first. I felt denial. The same kind of denial gamblers feel right before they double down. It's strange in those moments your brain doesn't care about your rules. It only cares about relief. Relief from discomfort. Relief from uncertainty. Relief from being wrong. So you hold and you pray. And when the loss hits, you don't feel pain, you feel shame. I used to think I had a risk management problem, but what I really had was an emotional management problem. Because risk at its core is emotional exposure. When you risk money, you risk ego, you risk identity, you risk control. That's why it's so hard to stop overtrading even when you know you should. That's why revenge trading feels irresistible, because the mind wants to repair the damage, to rewrite the story, to prove that it's still in control. But the market doesn't care about your story. It only reflects your state of mind. When I finally accepted that everything changed, I started to see risk differently, not as something to fight, but as something to understand. Risk is feedback. It shows you what part of yourself still needs work. If you fear losing, it's not about the loss, it's about your attachment to outcome. If you break your rules, it's not about greed, it's about impatience, the need for certainty. Risk exposes you. That's why most traders never master it. Because mastering risk means mastering emotion, and that's a lifetime journey. I began to look back at all my biggest losses, not to relive them, but to study what was happening inside me when they occurred. And I noticed a pattern. Every time I over-risked, I wasn't thinking about the trade. I was thinking about the feeling I wanted to have when it worked. That anticipation, that high, is what leads most traders into inconsistency. It's not lack of strategy. It's lack of awareness. We don't trade our plan. We trade our mood, our hunger, our need to feel right. I remember one session clearly. I had planned to risk 1% per trade, but after 3 small wins, I felt invincible. So I doubled my size. It worked again. And that's when the mind begins to whisper, "You figured it out." But the market loves to test your confidence. The next day, same setup, same aggression, and I lost twice as much. The pain wasn't financial. It was psychological. because the illusion of safety had shattered. That's when I realized consistency has nothing to do with being right. It has everything to do with how you behave when you're wrong. Consistent traders aren't perfect. They just don't let their emotions hijack the wheel. They treat risk not as an enemy, but as a partner, a necessary part of the game that teaches them who they are. Over time, I started to develop small rituals, not strategies, habits. Before each trade, I'd ask myself, what version of me is trading right now? If it was the impatient one, the one chasing yesterday's feeling, I'd step away. Because risk doesn't start when you enter a trade. It starts the moment you justify breaking your own rules. That's the hidden layer of trading psychology most people ignore. You can't manage risk with spreadsheets alone. You manage it with awareness. When I look at consistent traders now, I don't see people with magical systems or secret setups. I see people who have mastered the art of emotional spacing, that tiny pause between impulse and action. They still feel fear, they still feel greed, but they've learned how to recognize it before it takes control. They understand that every trade is a mirror, every loss is feedback, every impulse is a signal that the real battle isn't on the screen, it's in the mind. That's the first truth about risk. It's never about the market. It's about your relationship with uncertainty. And if you can learn to stay conscious inside uncertainty, you've already won. There's a strange thing that happens once you start winning. You begin to feel untouchable. The charts look clearer. The entries feel obvious. Your confidence swells quietly, like a tide that doesn't know it's rising. And in that quiet rise, something shifts. You stop following the plan because you think you no longer need it. You stop respecting risk because the market seems to respect you. That's the illusion of safety. You start believing the recent past is a promise about the future. A few green days and your brain rewires itself. It tells you that risk is smaller now that you've grown beyond it, that maybe you can take a little more. So you increase your size, you remove your stop, you tell yourself it's calculated, but it's not calculation, it's emotion wearing the mask of logic. I remember one week when everything I touched turned to profit. 5 straight wins, tight entries, clean exits, good momentum. And yet beneath the surface, I could feel something dangerous, growing, a subtle mix of pride and entitlement. I didn't see it then, but I was beginning to trade for validation, not for probability. The next trade I placed, I doubled my size without even thinking. I told myself it was smart risk scaling, but really it was ego scaling. The market didn't punish me right away. It rewarded me just enough to make the illusion feel real. That's how habits are built, not by rules, but by emotional reinforcement. The loss came 3 trades later. And when it didn't just take my money. It took my balance, my rhythm, my trust in myself. Suddenly, every candle looked threatening. Every tick felt personal. And that's when I realized how fragile confidence really is. Confidence built on results is temporary. Confidence built on awareness lasts. But most traders never make it to that second kind. They live trapped between 2 extremes, overconfidence when they win and self-destruction when they lose. Why do we break our own rules? Because rules are logical, but pain is emotional. And emotion always moves faster than logic. When you feel a trade slipping away, your body reacts before your brain can think. Your heart races, your palms sweat, and a tiny voice whispers, "Do something." That's the voice that destroys accounts, not the voice of the market, but the voice of discomfort. We break rules to escape discomfort. We move stops, add size, chase losses, not because we think it's smart, but because we want the feeling of control back. Every act of impulsiveness is a protest against helplessness. And yet every time we act on that impulse, we lose more control than before. The irony is cruel. The more you fight to control the market, the more the market controls you. I've watched traders obsess over risk parameters, back test, thousands of setups, build perfect spreadsheets, and still fall apart the moment emotion enters the room. Because emotion doesn't care about math. It only cares about meaning. And to the human brain, a small loss can feel like rejection, while a small gain can feel like redemption. That's why risk management at its core isn't a technical skill, it's a psychological discipline. Consistent traders don't manage trades, they manage themselves. They know that every system fails if the operator loses awareness. They know that risk isn't an enemy to eliminate, but a teacher to listen to. When I finally saw this clearly, I stopped asking, how much can I make on this trade? And started asking, how much of myself am I willing to lose if I'm wrong? That single question changed everything. Because trading stops being about prediction when you realize the real variable isn't the market, it's your behavior under stress. The illusion of safety is seductive. It tells you you're smarter than randomness, that your past wins prove you've evolved. But safety in trading doesn't come from being right. It comes from being consistent when you're wrong. And that's the paradox. You only feel truly safe once you stop needing to be. The moment you accept that risk is permanent, that uncertainty is built into the fabric of every candle, the fear begins to fade. Not because the danger disappears, but because you stop fighting it. That's the beginning of awareness, the shift from control to observation, from reaction to response, from ego to process. I started to build new habits, small ones, the kind of habits that looked insignificant, but changed everything over time. Before each session, I'd write down the maximum I was willing to lose that day, not just in dollars, in energy and focus, in peace. Once I hit that limit, I'd stop, no exceptions. At first it felt restrictive, then it felt liberating. Because real freedom doesn't come from unlimited choice. It comes from conscious boundaries. Risk limits aren't walls, they're mirrors. They show you where your emotional edge ends, and consistent traders know exactly where that edge is. I learned to think of risk as rent, the price you pay to stay in the game. It's not punishment, it's participation. You can't play without it, but you can choose how much you're willing to pay. That's what separates consistent traders from impulsive ones. The consistent ones don't eliminate risk, they respect it. They treat it like gravity. They don't fight it, they work with it. Over time, the need for excitement faded. I stopped chasing the rush of big wins and started chasing the calm of good decisions. That's when trading became less of a battlefield and more of a meditation. Every loss became a reminder, not a wound. Every risk became a teacher, not a threat. And that shift from fear to respect, from chaos to consciousness, was the beginning of consistency. Consistency. Every trader says they want it. But few are willing to live the kind of life it demands. Because consistency isn't built in the charts, it's built in the mind that watches them. When I first started studying consistent traders, I wasn't looking for strategies. I was looking for patterns, not in price, but in behavior. And what I found was simple, almost boring. They all had habits, not just technical habits, but psychological ones. They weren't driven by excitement. They were grounded by awareness. Their calm wasn't natural. It was practiced. Their discipline wasn't willpower. It was identity. These traders didn't treat risk as something to fear. They treated it as a language, one they learned to speak fluently. And I noticed they all shared 5 habits, small, invisible habits that made all the difference. Habit 1, respect the stop. Most traders set a stop loss as protection. Consistent traders set it as a boundary, a line that separates awareness from emotion. When they hit that stop, they don't feel pain. They feel clarity. because to them the stop isn't rejection, it's feedback. They understand that the purpose of a stop isn't to save money, it's to save the mind from chaos. When I started respecting my stops as promises instead of suggestions, my entire mindset changed. Every stopped out trade became a reminder I kept my word. That kind of integrity is addictive, the good kind of addiction. It builds confidence not from wins, but from consistency. Habit 2, risk small, think big. Most traders risk big because they want to feel something. Consistent traders risk small so they can think clearly. They know that the moment you risk too much, you stop thinking about process and start thinking about outcome. It's not the size of the position that matters. It's the size of the emotion attached to it. When your emotional risk is bigger than your financial one, you've already lost. So they trade small enough to stay conscious. To them, every trade is a conversation, not a confrontation. That's why they can do it every day, because they're not at war with themselves. Habit 3, accept uncertainty. Every new trader wants to eliminate uncertainty. They want to find the perfect system, the holy grail, the guarantee. But the consistent ones, they embrace it. They know uncertainty isn't a flaw of the market, it's its nature. So instead of resisting it, they prepare for it. They build routines to stay balanced when things don't go their way. They find peace in probability and freedom in letting go of prediction. Because when you accept uncertainty, you stop trying to be right and start trying to be present. Presence, that's the real edge. Habit 4, process over outcome. There's something magical that happens when you fall in love with your process. Losing stops feeling like failure. Winning stops feeling like validation. The process becomes enough. Consistent traders don't measure progress in profit. They measure it in behavior. Did I follow my plan? Did I size correctly? Did I remain emotionally neutral? Because they know that when process is mastered, outcome follows naturally. It's paradoxical. The more you stop chasing results, the more consistent your results become. When I began journaling, not just my trades, but my state of mind during those trades, I started to see the real data, the invisible data of emotion. And that's when it clicked. My trading performance was simply a mirror of my mental performance. Every undisciplined entry was emotional leakage. Every skipped setup was fear disguised as logic. So I stopped measuring how much I earned. I started measuring how well I behaved. And slowly profits became the side effect of discipline. Habit 5, the emotional reset. Every consistent trader has a ritual for resetting. After a streak of wins, they step away. After a streak of losses, they step away. They don't reward chaos with more trading. They give their mind room to breathe, because awareness fades when emotion builds, and when awareness fades, discipline dies quietly in the background. So they pause, they journal, they reflect. They don't see breaks as wasted time. They see them as investments in clarity. That's what separates the professional from the impulsive, not just how they trade, but how they recover. When I began practicing these habits, something inside me started to change. I stopped needing to win every day. I stopped trying to prove anything to the market. I began to trust the boring, the same setups, the same rules, the same size, because consistency doesn't come from intensity. It comes from repetition. At first, the mind resists it. It craves stimulation variety risk. It wants to feel alive. But over time, I learned that true aliveness doesn't come from excitement. It comes from stability, the kind of quiet confidence that says, I know exactly who I am when the market opens. That's what consistency really is, not the absence of emotion, but the awareness of it. Consistent traders don't eliminate fear. They navigate it. They don't suppress greed. They observe it. They make room for emotion without letting it drive. It's not that they've transcended emotion. It's that they've befriended it. That's emotional discipline, not coldness, but clarity. And once you reach that level of clarity, risk stops being something to manage. It becomes something to dance with. The market moves, you move. It pauses, you breathe. It surges, you adapt. No resistance, no fear, just rhythm. That's the secret no one tells you. Risk management isn't about protection, it's about presence. The ability to stay conscious no matter what happens. When you master that, you stop being a trader chasing outcomes. You become an observer of your own behavior. And that's where real consistency begins. There came a point when I stopped fearing risk, not because I'd mastered it, but because I finally understood it. Risk isn't the enemy of a trader. It's the invitation. It's the doorway between who you are now and who you could become. Every trade you take isn't just a financial decision, it's a mirror. It reflects how much uncertainty you can tolerate, how much fear you can face, how much control you're willing to release. When I used to lose, I thought the pain was about money. Now I see it was about identity, because every loss asked me the same question, who are you, when the outcome isn't what you wanted. At first, I didn't like the answer. I was reactive, defensive, attached. But over time, I learned something deeper. The more I surrendered my need for control, the more control I actually gained, not over the market, but over myself. That's the paradox every trader has to live through. You don't find control by tightening your grip. You find it by letting go of what you can't hold. I used to wake up obsessed with performance. Now I wake up focused on presence, because performance without awareness is luck. Awareness without attachment is mastery. The consistent trader doesn't wake up asking, will I win today? They wake up asking, will I stay conscious today? Because the outcome doesn't decide success, the state of mind does. I've come to see trading not as a game of prediction, but as a meditation on acceptance. Every chart, every candle, every tick is a reminder that nothing is certain, and that's okay. Uncertainty isn't chaos, it's truth. It's the heartbeat of the market. And once you stop fighting it, you begin to hear its rhythm. Some people spend their whole trading careers trying to eliminate risk. But without risk, there is no growth. Without exposure, there is no evolution. Without loss, there is no learning. Risk is the price of awareness. And the trader who accepts that stops running from volatility and starts evolving with it. That's what freedom feels like, not freedom from loss, but freedom from fear. I used to think peace in trading came from winning. Now I know it comes from detachment, from doing your job, following your plan, and letting the market decide the rest. Because once you accept that control is internal, the external no longer threatens you. The truth is, you never master the market. You master yourself inside it. The candles still move, the losses still come, but they don't move you the same way anymore. You stop seeing red as danger and start seeing it as information. You stop chasing green and start chasing awareness. The noise fades. The chaos softens. And in that silence, you find the calm that everyone else is searching for. That's what consistent traders have: not superhuman intelligence, not perfect timing, but emotional neutrality. The ability to stay steady when the world demands reaction. They're not trying to beat the market. They're trying to remain aligned with themselves while the market moves. That's real consistency, not in results, but in presence. When I look back at my early years, I see a trader desperate to win. Now I see a person learning to understand. And maybe that's what trading really is, a lifelong conversation between you and uncertainty. The more honest you are in that conversation, the more peace you find in the process. You stop needing to prove yourself. You stop needing to chase every move. You start trusting time. You start trusting yourself. And one day, you realize something incredible: you no longer fear losing, because you know that loss is temporary, but awareness is permanent. That's when trading becomes something more than charts and profit targets. It becomes self-discovery. Every candle is a lesson. Every hesitation is a mirror. Every mistake is a doorway. And through those doorways, you meet the version of yourself who can finally stay calm in the storm. That's the essence of risk management. Not protection, not avoidance, but consciousness. Because the more aware you are, the smaller the risk becomes, not on the chart, but in your mind. And that's where it's always been. When people ask me now what the secret to consistency is, I tell them this: there isn't one. There's only awareness, practiced daily, earned through loss, forged through reflection. Consistent traders don't have more courage than others. They've just spent more time in conversation with their fear. That's the real work, the silent work, the invisible work no one sees. And it's the only thing that separates reaction from mastery. So if you want to be consistent, don't chase the next setup. Chase awareness. Don't worship outcomes. Worship discipline. And don't wait for the market to calm down. Learn to find calm within yourself. Because the trader who can stay still in the middle of volatility is already in control. And that control, that quiet internal steadiness, is the truest form of profit you'll ever earn. Risk will always be there. It's the heartbeat of the market, the pulse of possibility, the price of participation. But once you understand it, once you stop fighting it, something changes. You stop reacting. You start responding. You stop fearing the storm. You start learning to breathe within it. The traders who survive aren't the ones who avoid risk. They're the ones who have made peace with it. Because when you make peace with risk, you stop needing control. And when you stop needing control, you find freedom. That's the paradox of consistency. You only find it when you stop chasing it. So as you close this video, remember this: your results will follow your awareness. Your habits will reveal your discipline, and your calm will become your greatest edge. The market will always move. Your job is to remain still inside it. This is Mind Over Markets, and this is where real trading begins.